And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast. Today is a brisk Friday, September the 24th. I'm John Hoagland. Thanks for trusting me with your time. We're going to be trying to find accurate context, good risk management, and infinite patience as always today. My dog is saying good morning. She's a dog walking out in front of the house, so she's freaking out a little bit. That should calm down shortly. Lacey, calm. Good morning. 9 o'clock this morning, we do have new home sales due out. We also have the Fed Chair Powell speaking at 9 o'clock. We have Loretta Meester speaking now, sending our equities a little bit lower. She's talking about she would like to start the tapering of the bond purchase program starting in November and ending the first half of next year. So she's all ready to go. I don't know if the markets are going to be. We'll see what the good Fed chair has to say. Treasuries have stabilized after their biggest sell-off yesterday in months. Perhaps Powell will speak to that today. U.S. stock indices to open lower after a two-day rally and looking like they're kind of ready to open, perhaps even with a little bit of a gap. That might be interesting for us. China's Evergrande has defaulted, but they have a 30-day grace period. Supply chain issues continue to fester all over the world, but seems to be particularly in the UK. We're talking about rationing fuel supplies because they don't have enough truck drivers to move the fuel around. U.S. crude prices are holding just below highs, right below that resistance level of the weekly kickoff high. It's going to be another interesting trading day today, as always. Make sure you like, share, comment, question, feedback, and heckling at will. As always, we're going to look at the VIX is up about 8% this morning, back above 20 at 2023. Dollar index lower, but recovering, 93.35. Pretty good move to the upside there yesterday. And the 10-year yield, another pop in the 10-year yield yesterday, 1.43%, but coming off a little bit. As always, got to say good morning to everybody. Good morning, Theo, Frederico. So close to the prize. Just stay calm. Look for the next good trade. You'll get there. Brian, Steve Lee, Jimmy Decker, Janus, Cam, George, Ricardo, Bill Phillips. Sent you a couple of emails, Mr. Phillips. Check your spam folder if you did not find them yet. Let me know if you do. Vince, good morning. John, Ryan, Harry. For the Journey, good morning, Journey. Laura, good morning. Epic, good to see you. Andre, Charles, happy Friday to you as well. Robert Eston, K, and NM. Sup? If you're new to the market forecast, welcome. As always, we're going to look at the charts for the products that are most popular here at Top Step: crude, even the S&Ps and Nasdaq, gold, the euro, the 10-year, and we've added now the nat gas, which looks like it's going to be a popular product for the coming months here as we come into winter. What are you doing? This dog. So let's get prepared here and see what we're seeing in these charts. Hey, Jerry is awake. Spencer, good to see you. And let's jump in. So as always, starting left to right with the crude oil. The daily chart, we can see that the market is tested back up to. That was the sound of the market for today. Yeah, it was barking a little bit, huh? Okay. So volume, boy, we've seen some pretty decent volume since rollover. It certainly seems to be holding very well. We added 32,000 in open interest yesterday on this move to the upside towards an important inflection level. This inflection level largely based on a swing high from back here in the early July, and seems to be giving us a little bit of trouble here. Now, I'm going to do a little presentation, something that Fred Decker was talking about. And when we see support or resistance levels, there's sellers up here. If we exhaust those sellers, then we may bring in new business to the upside and see this market continue to the upside, which is going to put all these sellers in duress. The market's always going to go to the point which is where the most pain is exerted, right? So big boost in open interest yesterday. It appears as though this auction process is seemingly healthy. Can sellers continue to cap off price against some considerable buying coming into this market? The fact that we are opening or just opened relatively close to an important inflection level may indicate urgency. We're going to say we may see an opening range trade, which we just opened, 5 minutes ago. That first minute of trade can be crucial in finding good opportunity as the market opens near inflection levels or out of balance. All right. Take a look at the 30-minute chart here. Maybe we'll get a glimpse of how the opening range trade has played out. Now, typically, opening range trades I'm a little cautious of because we're in range and we're in value. But being so close to an important inflection level, we got up close to it. We could not get to it. We looked at it last night on some pretty decent volume, actually. We were pretty stiffly rejected. We looked back up towards it again, towards yesterday's high. We were rejected again. Now the market has opened. I'm gonna go out on a limb and say the opening range might be the high of the session here, which means sellers are in control. We're seeing sellers up here that are keeping price from continuing to move higher. If we started to get a little bit too long up here, which might be an indicated by that big boost in open interest, 32,000 added contracts yesterday. Maybe we got a little bit too long to get up to push up against this level. Sellers were too resilient. We're at the low of value. We're at the high of last week's range. So this is, an important inflection level. Value low from yesterday. This area here is where the market found value yesterday. If it rejects it, points below will be targeted. We do have a naked point of control considerably below yesterday's range low. I'm just going to pop this on here real quick. And that could be, a downside target. Now, we have been moving higher for the better part of the week. It is Friday, and not really necessarily moving higher. 1, 2, 3, 4, 5. We've had a pretty decent move off our low here, 69.40. About a $4 move to the upside. Is there going to be possibly some profit taking today? It is entirely possible. We can't really necessarily predict that. I'm looking at this area as an important inflection level right now. This is early in the session. It's last week's high. It's yesterday's value low. Might be some fish here. Oh, wait a minute. A couple other things. If we do find support here, we have a week regular trading hour session high yesterday and a week overnight high. We don't see necessarily true excess at the highs here in crude oil. So that's gonna kind of tell me that while we found some sellers here, have they been overly aggressive? So I'm interested in this area down here. You mini S&Ps. Well, okay, if you remember on the recap yesterday, we talked about the fact that there was some pretty negative delta on this move to the upside, which may have indicated some new business to the upside, some buyers. An increase in open interest is what we were looking for to prove that. We do not have that increase in open interest. We lost open interest. Surprising. We've been losing open interest for the last 5 days. 1, 2, 3, 4. So lost open interest here, lost open interest. Of course, we lost open interest here. So there's no real energy coming into the market. It seems to be leaving the market. So the short time frame auction to the upside seems relatively weak. The action was more about short covering than new business because both of these profiles were P-shaped. And let's take a look at the 30. Opening range is the regular trading hour high so far in crude oil. Thank you, Mr. Fred Decker. All right. So, as we wait for Chairman Powell, when we look at these two days, okay, not this one. This was Fed day, somewhat range bound. P-shape profile indicates short covering. Okay, did we I think we lost open interest the day before yesterday. P-shape profile, we lost open interest yesterday as well. We were looking for some indication that buyers were coming into this market. We did not get that. So now we've got settlement up here at 44.38. We're waiting for some information as far as new home sales and Chairman Powell to speak. Meester's already talking about tapering bond buybacks as early as November. That's a little bit earlier than I think many people were expecting. So we're opening below value but in range. Again, the upside the short time frame upside auction off the recent lows here is not representing very healthy activity, if you will. So I'm going to be probably looking for opportunities to sell strength until proven wrong. What we do have here is, this is kind of a bear flag. We broke out above it yesterday as it was kind of written, but we've failed. We're back inside of it. So this is showing some sign of rejection. Looking at the profile, what do we have at our highs? So we have another weak high. These even highs like this are not showing excess. So we're gonna try and be a little bit careful today in our decision making. We're in range outside of value. I'm gonna try and stay patient. The Nasdaq is a whole other story now. Here's the daily. So we added 4,000 in open interest yesterday. I was looking for that in the S&Ps. It didn't happen. It happened in the Nasdaq. While volume falls, open interest rises. The auction seems stronger because of the open interest, but is it really? We have the similar P-shaped profiles on the 30-minute chart. Let's take a look. P-shape. This market has held this trend line, I would say, a lot better. I mean, it's not a perfect trend line. It is a contrary move on shrinking ranges that is right now perhaps proving to be a bear flag. So there may be some potential downside here. Right now, we don't have a gap. Do we have a strong high yesterday? There's a lot of conflicting information here. Whoops, that's not what I want. I want this. So in the Nasdaq, at least we have a degree of excess at yesterday's high. S&Ps, we do not. So, again, if I'm creating cognitive dissonance in you, then that's a good thing. We'll try and be patient. If you're going to go looking for trades, I guarantee you're going to find one, but try and stay patient and wait for the market to come to you and say, hey, here it is. And your intuition should be peaked at that time. Impulses, no. Intuitions, yes. Lacey, please. I'm talking here. All right, gold. Volume and open interest increase and on what I'm calling a bit of a surprise down day. Was this a bear flag? Very well could be. Wasn't really looking for this. Missed it. The opening range was the high of the session yesterday. So far, I think it's the high of the session today as well. So we added 3,700 in open interest on higher volume. The downside, short time frame downside move still seems to be relatively healthy. It's got me a little bit wondering if the market is a little bit too short to continue to break. But when we look at what we did all week, we didn't really move all that much. Monday, Tuesday, Wednesday, Thursday, Friday, relatively range bound, and we're testing the bottom end of that range right now. Take a look at the 30. So yesterday's opening range was the dead high of the day. I usually like to mark the high of that opening range when it is the extreme in a red line right here. So the market did open. We drove lower. Looks like short covering, but we did add open interest. So that's selling coming in below the bottom trend line of this bear flag. Are we going to continue that? Well, this last night we didn't really have any overnight inventory. Settlement was 1749.80, and this red line here represents the high of the opening range. So the market is trying to continue to move lower. I'm going to find out relatively early today, I think, that my theory that the market might be getting a little bit too short to continue to break, I'm probably going to find that out relatively early today. All right, so no overnight inventory, no gap was suggesting patience. The opening range did offer an opportunity back inside the opening range to get into it with relatively cheap price. So I took it. That opening range high is 1750.50 if you want to put that on your charts. Let's take a look now at the euro. So as rates move, as the dollar moves, it is mirroring, the euro is mirroring the dollar. Weekly support brought in buyers in the overnight. We haven't had the opportunity really to see an opportunity for us to get an execution in regular trading hours session here which is 17:05. The dog is attacking me right now. Here's the daily chart. Let's start there. Better idea. Range bound really for the week. Yesterday's volume, though we did add 4,500 in open interest, the volume was a little bit soft. That's in question here. Overall, again, range bound rules. Volatile yet range bound. I mean, we had some pretty decent swings the last couple of days. We did not open with a gap. However, we did not leave the opening range the high of the session. However, we have rejected range from yesterday to look for opportunities at lower pricing. This is a naked point of control that we tested yesterday. I'm going to take that off. Really, the next visual level that I'm looking at for the euro is the low, the weekly kickoff low. Anything in the middle, I'm going to try and be patient. Patience. Last thing I want to do is ruin a good week on a Friday. Here's the 10-year. Okay, this was a typical technical breakout below this trend line here. We had our kind of falling triangle here. We broke out. We brought in a whole bunch of volume. We added a whole bunch of new open interest, 54,000 new positions coming in on this push to the downside. You think we found some sellers yesterday? You think rates popped to the upside? Yes, they did. So for now, though, rates have somewhat stabilized. What does that mean for us? Well, if that's not the right chart here, let's go to this one. So we've tested this naked point of control in regular trading hours. I'm going to take it off. That visual has been achieved. We've got another one a little bit lower. The opening range, the high of the session, it looks as though we've come back and retested that high of that session. It still looks like it's a valid opportunity for a short. This bar right here just traded right back up to that high of the opening range, which was 132.09 and a half ticks. 132.09 and a half ticks. Put that on your chart. Can be kind of a vital level. We do have the gap. So we have a gap from regular trading hour to regular trading hour. If we can't close the gap, we're going to look for this market to continue to perhaps rotate lower to check overnight low and perhaps this naked point of control, which remains unchecked down below. We re-accept inside value today, however, we have a substantial value area. So the value area special situation comes into play right now if we bring price back into value and show signs of acceptance. There's a higher probability upon reacceptance of value when opening outside of it for price to rotate to the other extreme of value at some point in this session today. Okay, and now what's that going to do? It's going to take a little bit of a break in rates to do that. So if we don't find any acceptance in value from yesterday, we're going to continue to look for opportunities to sell strength. Hey, we're doing pretty good on time today. Oops. Natural gas, still going to be doing a lot of research in that today. Next week, we will have some expectations for some weekly kickoff levels, some important inflection levels that technically and through profile and through a little bit of math, we're going to start watching to see if we can come up with decent levels where longer time frame traders will be forced to or want to adjust inventory. That's the point of those weekly kickoff levels. So yesterday, nice turnaround, high volume. We added 6,400 in open interest. It is, however, rollover. We have to remember that. This boost in volume may be because the volume moved over to November yesterday. So this is one of the things about rollover that makes me crazy is I can't necessarily count on volume and open interest information during the rollover. This week's high, our overnight high, currently tested. Looks like an interesting area for an execution. Take a look at the 30-minute chart. Okay, finally, we've now checked this naked point of control in regular trading hours. So I'm going to just leave it on here as a memoir that we did get to do this. Here's our day. We have a gap. If we cannot close the gap, we look for continuation to the upside. Our overnight low looks like a very interesting level for us. All right. Okay. So, this is the example that Fred was talking about. I did it a number of years ago, and it's a good example. Now, if this stack of cards here is sell orders, price is coming up to the sell orders. This is resistance. There's a whole bunch of orders to sell up there. The price is going to just keep bumping up against it. But the more it bumps up against it, the fewer sell orders are going to be up there. If price keeps pushing against it, we're going to see the stack of sell orders get smaller and smaller until finally it breaks. So the supply and resistance levels are showing us demand or supply. That level that we were talking about in crude oil is a supply level. If the supply level breaks and demand usurps supply at that level, you're going to have that move to the upside. Lacey, come here. Come here. Come up here. Say hi to everybody. Come on. Come on. Hi, Lacey. Yeah, here's my girl. Here's my girl. Here's the one that's barking at everybody outside. All right. So everybody says hi. Okay. Friday, you make a little bit of money. There's nothing wrong with walking away. Have a great day. Have a great weekend. Take your deep breath. Stay humble, grateful, and creative in your trading today. I'm looking forward to myself making a little bit of money, taking care of a business for the rest of the day, and then having a nice weekend. Everybody, have a nice weekend. Do something nice for yourself. Do something nice for somebody else. Stay kind. Say a prayer for world peace. We'll see you Monday morning. Next week is the 401 level of classes. We're going to be talking about indicators and tools, 2 days of introduction to the market profile, and finally, context, hypothesis, and planning. Getting some really good feedback and some great ideas for the next time we do this. We're going to be adding content and improving it as we go along. So looking forward to, again, another great week next week. Have a great weekend. I'm going to stop yammering. I'll see you in the pit in a couple of minutes. Trade well. Get out there and profit. We are looking forward to your success. Trade well today.